Stocks fell on Thursday as Jerome Powell was up in front of a TV audience yet again and still claiming that he wants to be accommodative towards the markets and does not expect inflation to be permanent. So that seemed to rattle a few of the markets that were out there. We did see oil struggle just a little bit here today, and a number of the key sectors were lower. We actually saw the Dow Jones Industrial Average finish higher today. It was the only one of the major four indices that finished higher. It was just shy of an all-time closing high as well. But the Russell 2000 small cap universe really got smoked here today. So we'll take a look at all that, see what it means for our posture. We'll then get into our trade application example, where I wanted to focus on one of those mega cap financial stocks that already reported their earnings for an options trade that will expire in August. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 15th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go into our description area, sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee, and I would encourage you to follow me if you're not doing so already. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join us at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's activity. And as you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members following along at home. Now, as mentioned in the intro, you can see that the Dow Jones was the standout here today. Didn't have a big up session, but the fact that it closed green while the other indices were firmly in the red is rather telling. You can see that the Dow Jones was up 0.15% today and did end up with a long lower shadow, as we did see with some of these other indices as well. But of course, the difference being that we did actually close in the green when the closing bell rang. And you can see that we were just shy of this closing price right here from July 12th, which kind of stands as our all-time closing high on the Dow. We're just 10 points or so away from that. So we could easily get that tomorrow. We'll have to see how things shake out. Now keep in mind, tomorrow's a fairly important day because tomorrow is our July options expiration. And so those of you that have last-minute maintenance that needs to be done on your portfolios, tomorrow will be your last chance for the July options. But that does tend to come with a little bit more volatility on occasion, so be on the lookout for that possibility. If we do get a push, I would imagine that the Dow Jones stands a very good chance at hitting a new all-time high here as soon as tomorrow. With the other indices here today, you can see that we've got the S&P 500 that closed lower by 0.33%. We are just 1 day removed from an all-time intraday high in that case. We can see that the NASDAQ composite was down a little bit more. It was down 0.7% today, so it was actually our laggard today. That was its third straight down day, but as you can kind of compare it to the Russell 2000 over here, it's not nearly as devastating as what the small caps have been going through here recently. This is a pretty ugly 3-day move, and keep in mind, it was just last week that we had a really ugly 4-day move to the downside. So we really see quite a bit of weakness there in the Russell 2000. As I mentioned in the video on Tuesday, it does seem like it's the outlier. Clearly it's breaking important support levels. Clearly you can see that the background color of the chart is dark pink, signifying that we now have a strongly bearish posture on it according to the intermediate line on the market forecast. Remember, when that line goes down below that indicator's midpoint, or the 50th percentile, we then start considering that as a strongly bearish candidate. And you can see with our other indices, all the rest of them are still that dark green. So it's a bit peculiar to have the Russell 2000 so weak that it's giving us a strongly bearish posture, and the others so strong that they're strongly bullish. Usually you have a little bit more of a transition between those indices, but right now we are seeing some fairly stark differences. Another thing I would point out about the Russell 2000 is it still has that red moving average as well, and that signifies price is below a falling moving average. Of course, I talked to you about that on this candle right here when I was with you last on Tuesday. That was the day when we transitioned from that yellow 30-day moving average to a red 30-day moving average. And so not necessarily a great place to be hanging out at this moment in time if you are involved in the small cap universe. Now, in terms of where things stand with other potential trade setups, The only thing that we came close to today was we almost had a bullish intermediate confirmation signal on the NASDAQ. We didn't quite finish there at the end. With that little push we had, you can see we have a little bit of a lower shadow on today's candle there, and that was just enough to get that red line out of the lower reversal zone there. So the red line did close at 25. Remember, if it had closed below 20, we would have called that a bullish intermediate confirmation signal. So didn't quite get there, but nearly. So a little bit more of an aggressive pullback that we've seen here more recently, a little bit more of a legitimate sell-off here, particularly for the Russell 2000. And right now, investors are seeking a bit of solace there in the large cap universe, which tends to be considered a bit more safe with those Dow Jones styled indices, stocks out there, like the big blue chips, your JP Morgans and your Coca-Colas and what have you. I was mentioning on Twitter yesterday that the soda stocks all of a sudden are popping. And so if you look at Coca-Cola, it has had a really nice week right here. We're on the verge of breaking out to a multi-month high there on Coca-Cola. And of course, that follows Pepsi earlier in the week, where we had a really solid move on Pepsi after their earnings announcement. And you can see here we're breaking to all-time highs on Pepsi. So we're getting a little bit of life there in some of those consumer staples stocks all of a sudden. Those are the types of companies that you'd find there in the Dow Jones Industrial Average. All right, let's go ahead and take a look at our 3 green arrows chart here. Now, we had a conversation about the 3 green arrows chart today in my question and answer session. So if you're interested in that, feel free to check that out if you are a premium member of Market Scholars. But for my version of the 3 green arrows method, I use chart 4D. We do have a secondary 3 green arrows method here that David uses on occasion, which is 4E. So let's go to the traditional one that I tend to use, which is 4D. And we can see if there's any of these charts that currently are giving us 3 green arrows, and we do have one, and it is the Dow Jones Industrial Average, but it's all alone there now. Awfully lonely feeling because just yesterday we had the S&P 500 there. Last week we had the NASDAQ there. So the Dow is the one that, while it didn't really look as strong along the way in the last couple of weeks, it's the one that has kind of maintained the strength the best here this week, as you can see that we're very close to those all-time highs, kind of just going sideways over the last 4 days, whereas these other charts like the S&P 500 and the NASDAQ Composite have actually rolled over a little bit. Now, they're still above rising moving averages, so we don't want to make too much of it, but I'm just trying to explain why the Dow has managed to retain its 3 green arrow status and the other two were not. The other two lost their momentum. Notice that the reason that the S&P 500 no longer has a 3 green arrow status is because on the MACD histogram, we do have a red arrow now. That is a signal that we have lost momentum, and the same thing has already happened to the NASDAQ Composite down below. That actually occurred last week. So the Dow Jones, because it really hasn't lost that momentum too much, it's still continuing to kind of track sideways to up. We still are above the 0 line on the MACD. Now, just as was the case on Tuesday when I was last with you, you can see the Russell 2000 does have a 3 red arrows signal there. So again, Russell 2000 not looking so good here, but I will say that you have that nice long lower shadow today, so we'll see where that takes us. It is nice that that did not breach that prior low right there. So maybe, just maybe, the bulls were starting to step in, sniffing out some value opportunities there within the small caps. Of course, would like to call this a hammer, but we won't know until tomorrow whether it actually was or not. Those one-day candlestick patterns need the following day for confirmation. So if we do have an up session tomorrow, perhaps we'll look back at this candle today and say, yes, indeed, that was an important hammer candle right there. But all bets are off. When we have an options expiration, as I mentioned before, we could have some very volatile activity here tomorrow. So brace yourselves. It could be an exciting session as always. Let's go ahead and take a look at our four grid for the 1040 crossover method, which is chart 4C. And as mentioned on Tuesday, this doesn't have a lot of sensitive signals. It's kind of one of those where you try to get involved in the majority of the trend, knowing that you're not going to buy the bottom and you're not going to sell the top. And so for all 4 of these charts, you can see that we have a golden cross, and that golden cross occurs when the orange line goes up and above the blue line. And as a reminder, these are much further back charts. These charts actually go back 3 years that you're looking at here as opposed to the 3 months that we were looking at on the other chart. So this will give you a much broader scope in terms of what's been happening in the market here over the last 3 years. And as you can see, for most of these charts, they look pretty healthy. I know there's pain on occasion on days like today or others where we have a bit of a sell-off. But if you just kind of take a step back, take a deep breath, and remind yourself of where we've come from, you can realize that investors have largely a smile on their face if they've been on the long side of the market here. These signals have worked out pretty nicely this time around in terms of the 1040 crossover method. If you would have gotten into the S&P 500 right here, or into the Dow Jones right here, or the NASDAQ way back here, or even the Russell 2000 right back here, you're probably feeling okay about your performance from an investment perspective there. All right, let's go ahead and quickly pop on over to the internet. I always like to get a chance to say thank you to those of you that help support the Market Outlook. You guys know that this is a voluntary project that David and I do. We don't get paid to do this. We don't make money on advertising. We don't monetize it other ways. So we do this purely voluntarily. And kudos to David, by the way, as well. He got back very late on his vacation yesterday and was kind enough to put together a Market Outlook early in the morning for you guys. So if you guys appreciate the effort that goes into this, which is considerable, and I know you probably just think, hey, it's just a half an hour, right? Actually, it's probably about 3 hours all in when you're talking about looking for the trade ideas and the editing of the videos and doing the research and sending out the notification, all that kind of stuff. So if you appreciate it, we ask one thing out of you. Just help support it on social media, in particular on Twitter. You can see that 122 of you stepped up to the plate last time around, and it definitely does not go unnoticed. I certainly appreciate it. In fact, I regularly peruse who of you is willing to step up to the plate. So thank you to Lloyd and Giles and Ken and Surendhar and Kenneth and Carl and Rick and Craig and Dave and Dale and Donald and Ann and Austin and Keith and Rick and Jayesh, Doug, Terry, Bob, John, Stock Market Junkie, Janet, David, Brian, and others. There's too many to go through here, but you guys are awesome. We really, really do appreciate that. So keep up the great work on your end there if you want us to do these videos as often as possible. Also, earlier today, I did teach my question and answer session, as I mentioned earlier, and it was another doozy. It was another 3-hour session. So for those of you that are not premium members of Market Scholars, the question and answer session is the class that I teach where it's kind of an Ask Me Anything, where students get a chance to pick my brain on different topics. David also has a question and answer session every week. He does his on Saturday mornings. So this is where we invite our premium members in. Plus members, unfortunately, are not invited to this particular class simply because we just don't have enough capacity for it. So we want to make sure that we have an opportunity to answer as many questions as we can there. So today we answered questions about how do we think about phantom green arrows and what do we mean by that, and talking about a 5 green arrows signal for my top-down trend trading class. We also got a chance to look at a shipping company, Matson, as a dividend growth investing candidate. Also talked about Abbott Labs and how you put trades into the Thinkorswim platform, and sometimes you get a little message back that says, hey, we've replaced your order because of a dividend payment. So we kind of talked through that and some of the ways that you can maybe think about that and maybe go back and adjust things if you so desire. We also talked about how to set up multiple monitors and having multiple Thinkorswim instances open all at the same time. We had a conversation about the 3 green arrows chart, as I mentioned before, with chart 4E kind of compared to chart 4D, and how to think about that compared to chart 1A, which is what I use for my top-down trend trading class. And then we had a really long conversation about CRISPR in general. CRISPR is a very exciting technology, one that I've gotten very involved in here over the past year. And so I spent actually an entire hour. You can see I started answering this question at the 1 hour and 59 minute mark. We didn't go to the next question till the 2 hour and 59 minute mark. And so if you want to hear my thoughts on CRISPR and where I think the world is going with that technology and some of the stocks that may benefit from that, feel free to check out that conversation there. I kind of just unloaded as much as I could possibly tell about that particular medical innovation and where I think things are going to be going in the future with 4 of those different stocks that are involved in that particular line of business. And then we also had a conversation about valuations, about why value stocks were having a hard time keeping up with growth stocks over the past couple of decades. So if you're interested in any of that conversation and you're a premium member, you can find that recording now on our Trading Rooms tab up here. Just click on Trading Rooms. And then once you do that, you'll then go into our events calendar, and you can see this was today's recorded session right there. Tomorrow, David will be teaching his technical analysis class at 1 p.m. Eastern Time. So if you've ever wanted to be taught technical analysis by a chartered market technician, then that's your opportunity with David Settle. There's nobody better in the business to help you with that. And he also did teach his portfolio management with ETFs class earlier today, and that is available for both Plus and Premium members on a recording if you want to check that out. Also, real quick here on the factor selector, which I put together kind of midweek. It's usually Tuesday nights when I get the information for this, but just a reminder that as of this exact moment in time, we have seen the quality factor leading this market. So think of stocks like Microsoft as a quality stock, right? One of only 2 companies that's ranked AAA by Standard & Poor's from a credit rating perspective. So Microsoft and Apple and some of those higher quality stocks have been leading this market lately, which probably ties into what I mentioned before about the Dow Jones Industrial Average kind of being your strongest group here all of a sudden. A lot of those are, of course, big quality blue chip types of companies that are out there. All right, let's get back on over here to our Thinkorswim charts, and let's do some 12 grid analysis. And we will start off with chart 5A. This is our asset class 12 grid. As we pull this up, a reminder that what we're looking at here is a set of 12 different securities or financial instruments, and the background colors of these 12 grid charts will tell you what the current intermediate posture is according to the market forecast technical indicator. If you have a green background color, that means you have a bullish posture. If you have a pink background color, that means you have a bearish posture. And then there's a couple of different varieties of each of those colors. In other words, a dark versus a light shading of those colors. So as an example, Bitcoin is our only one on this first grouping here that has that dark pink background. It does have a strongly bearish posture as of this moment in time. It's just kind of dangling at this level here at around 31,000 or so. Hasn't really broken down in a big way, but it doesn't really look like it wants to break higher in a big way either. So right now, you probably better stay on the safer side of the equation for the time being until we see a break higher. It looks like the market is not overly enthusiastic with this alternative asset class at this moment in time. Some of these other charts are this light pink color, so like preferred stocks, high yield bonds, oil, and then long-term U.S. treasuries. They have that pink light pink background color, and that signifies we have a weakly bearish posture, not a strongly bearish posture like we saw with Bitcoin. So it's just more of a heads up that, hey, there's been a little bit more wear and tear on the charts. I'm a little bit surprised, to be honest with you, with the TLT one, long-term U.S. treasuries. That's been a nice 1-2 punch back higher. I was mentioning on Tuesday where we'd want to be on the lookout for the possibility of a bounce somewhere between where we were there on Tuesday and that upward trending 30-day moving average. Well, it looks like the market wanted to get that bounce going right away because the last 2 days we've had a nice move higher. I'm a little bit surprised that we stay with that weekly bearish posture there. Remember, you can right-click on the chart and go to Maximize Sell. You can kind of get a better view of that market forecast technical indicator down below. And you can see, just to confirm with your eyes, that the green line did fall out of the upper reversal zone and is at 77 and falling at this exact moment in time. So I would have to believe that if we get up and over this candle tomorrow, that green line will likely start rounding the corner and going back higher, and we'll get a background color change on that. So, I would just be careful with thinking too bearishly about TLT, and on the flip side, I would be careful about thinking too bullishly about interest rates in general. You can see that interest rates, of course, move inversely to bonds. They've been down the last couple of days. And despite that, you still have that light green background color there. So let's right click and go to maximize sell here as well. And you can see that the intermediate line is at 24 and rising. But if you look at that green line, it kind of looks like it's just going sideways. So you get one more day lower tomorrow, especially if it breaches that particular candle there on the 8th. I would have to believe that we're going to see a background color change back to pink right here. And obviously that is the direction of the previous trend. And so until that breaks, that's the assumption. That's kind of what I had mentioned to you guys in the previous presentations is, posture setting using one technical indicator like the market forecast is useful, but it's not the end all be all, right? You've got to use all the tools in your toolbox to look for your opportunities that are out there. So right now, I would kind of obey the trends a bit more and recognize that TLT remains reasonably bullish despite the background color, and the opposite would be true for TNX, which tracks the 10-year Treasury yield, which closed today at 1.29%. Now, I mentioned in the intro that oil fell today. Looks like it was actually the second straight day for oil to fall. I was mentioning on Tuesday that oil's chart actually looked really good. Well, here's an example of where I look kind of silly for saying such a thing now, because after 2 more days to the downside, it's not looking nearly as good right now. You're basically sitting right on that moving average as of this moment in time, and you almost get the feeling that you have a bit of a double top formation right there on USO. So that is something you want to watch pretty closely there. Remember, we were comparing this to energy stocks, and I was saying one of those two things has to give, because the oil chart still looked really good, but energy stocks were already breaking down. So now with a few more days worth of information, it's starting to look like maybe the energy stocks were right to be leading the way to the downside, and very well could be the case that oil starts spilling over a little bit here. So we'll keep our eye on that story. Oil's been one of the more positive developments price-wise in 2021. And so, it'd be a shame to lose the support of that area of the market in the second half of the year. But we all know where oil's been in the last 5 years. And we know that more times than not, if you're on the bearish side of the equation when it comes to oil or energy stocks, you're usually better off. So we'll see where it takes us. But right now, a little bit of a give back there in oil, sitting right on an important 30-day moving average. Now you'll notice gold is over here sitting right on its 30-day moving average as well, but it actually got up and above it. Notice the color change of the moving average. It went from red to yellow here. And so that signifies price, in this case, is now above a falling 30-day moving average. So in other words, there's conflict. Price is up, moving average is down. So we kind of have that yield color of yellow in that case. So, I was mentioning the bearish trade on gold last time. That trade does not look nearly as good today. And in fact, I even mentioned that on Tuesday. I said that the signal had gone away in the final half of an hour of trading after I had already placed the trade. So kind of was almost a heads up in just that final half of an hour on Tuesday that this trade may not really work to our advantage. We're going to continue to let it play out. So I'll keep my eye on it. We're only a couple of days into it. We don't want to give up so early, but right now we're certainly not heading in the right direction with that trade. So we might need to keep a tighter leash on that one. In terms of the US dollar, it was up here today about 0.28%, and it is continuing to trade near its 3-month highs at this moment in time. One chart that looks surprisingly good all of a sudden is foreign bonds. This chart in the middle with the dark green background color, the ticker symbol we're using there is BNDX, which is an ETF that tracks foreign bonds. And all of a sudden here, you are seeing a really nice breakout. So while bonds are not considered all that exciting in most cases, sometimes, if it's the road less traveled for a trend trader, maybe you can get a little bit of mileage out of a chart like that. And of course, you would earn a little bit of income along the way if you ended up holding it for a few months as well. So we'll keep our eye on foreign bonds, but right now I like the way that chart is setting up. It's looking even better than U.S. bonds. It's not that U.S. bonds look bad. I like the way that that's setting up as well. It's just foreign bonds are kind of taking a little bit of a leadership role right here. So keep your eye on BNDX. And they definitely look better than high yield bonds. Those of you that have been following this presentation long enough will know the correlation that I've mentioned countless times of high yield bonds to oil. This isn't always the case throughout history, but in this current era, many of the corporations that are raising junk debt, right? That's another word for high yield, are those oil companies, because they don't really have any other opportunities or options. If folks are going to lend them money, they're going to do it at very high rates because they know it's going to come with very high risk. And so typically junk bonds have been taking a cue from the oil markets here. And with oil down the last couple of days, we're seeing some some sell-off there a little bit in the high-yield bond market as well. So right now, it looks like foreign bonds may be the place to be. When it comes to the stock markets up at the top, the U.S. market is the one that has the dark green background color, so it looks better than the developed foreign stocks, and it looks better than the emerging foreign stocks. Of course, emerging stocks have been very controversial lately, as China is such an important player within the emerging markets, and of course, all the controversy with Didi and the like here recently. So it is good to see that EEM has had a pretty nice little rise in the last week, but we remain below a falling 30-day moving average on both of those charts. So while we do have weekly bullish postures from a market forecast perspective, the price action does not look overly healthy right now, and you're going to be fighting against resistance of that falling moving average, at least in the short term. Let's go ahead and take a look at the sector analysis now. And for that, it is chart 5C. And as we're taking a look at this, we can see that there's only one pink chart on the board, and it's the same one that was pink on Tuesday. So I'd mentioned it then, and I'll mention it again now. It's the energy. Now, at that time, oil was still looking good. And so it's a little bit peculiar to see oil and gas stocks doing poorly here, but oil itself doing well. Now we have a couple more days worth of information. It's starting to look like the oil stocks were maybe right for selling off here over the last couple of weeks, because now it's starting to drag oil down with it. Now, just when you thought it couldn't get worse, you can see that we've got a broken support level here, and you do have a head and shoulders pattern of sorts, not a textbook example, but it gives you that impression. So you could certainly have a bit of downside action here, but I think one thing that is worth paying attention to is we do have an oversold cluster signal here. So maybe that will be an excuse for some buyers to come into the market and maybe scoop up some of that merchandise that they feel kind of sold off a bit too much. For those of you that are newer, those little green dots signify oversold cluster signals. And that happens when you have the green, the blue, and the red lines in the low reversal zone all on the same day. So you have that dot that shows up there and that dot that shows up right there. And a lot of times you do get a quick little reversion to the mean type of a move there. For example, if you were to look at what happened here to materials a couple of weeks ago, actually about a month ago, you had an oversold cluster signal. You had a nice reversion to the mean type of a move. And you also saw the same thing down below here with utilities. Took a couple of them before it got going there, but it did lead to a nice rally there. In the case of utilities, it actually got you up and over that moving average. So that's kind of interesting there. In this case, we're so far below the moving average with energy. My guess would be if we do get a reversion to the mean move, which is entirely possible, it's probably not going to break through that moving average unless there's some big geopolitical event or something like that. Remember, you always got to be on the outlook for that when it comes to oil, because that market does get moved around anytime a bomb goes off somewhere in the world. So news can certainly affect things, but just in the normal day-to-day volatility of the financial markets, I wouldn't expect a big push above the moving average at this moment in time on XLE. The rest of the charts are all green. Now, obviously, some of the charts look a little bit better from a trending perspective, and I think it's mostly the ones that I had pointed out on Tuesday that continue to catch my interest. Real estate still looks strong. We concentrated on real estate stocks in my Monday top-down trend trading class this week. Technology still looks reasonably good with Microsoft and Apple kind of leading the way. A little bit disappointing to see the move in communications here. I think the trend is still good, but you do have 3 straight down days on communications. So you got to be on the lookout for that possibility of rolling over. And you actually have a little bit of a rolling over there on healthcare today as well. Saw some interesting news out of Biogen and some of the commentary there from the hospitals and whether they would support that new Alzheimer's drug of theirs. And so that caused a little bit of pressure within the healthcare space there today. One that I'll point out that I did not mention on Tuesday, but is starting to look more interesting by the day, is consumer staples. Now, I had already mentioned Coca-Cola and Pepsi earlier in tonight's session. This kind of tells that story a little bit more. Notice how the chart on staples is changing before our eyes. We are now up and above that rising 30-day moving average. We went from red to green in just one fell swoop. You don't see that all that often. You usually see kind of transition to yellow for a little bit of time, but we went from red to green right there, meaning that price is now above a rising 30-day moving average, and we now have a strongly bullish posture on staples. Now, we do have some work to do, right? We've got all these candles back here that will represent resistance areas where sellers could have an excuse to step up. But if we start getting into a little bit more of a volatile market here, which today kind of felt that way to me, a lot of those high growth types of stocks were really getting hit. It could be a market where participants feel a little bit more comfortable and safe getting into those cozy consumer staple stocks like the dividend aristocrats and your Coca-Colas and your Pepsis and your Procter & Gambles. And so kind of liking the way that staples are starting to stabilize at this area as well. All right, let's get into our trade application example for the day. And for that, I'll just pull up chart 3A. And the ticker symbol in question is GS, the venerable white shoes of Wall Street, Goldman Sachs. And as you can see here, I've got a couple of lines drawn on the chart. Those lines represent break-even levels in the trade that I conducted for tonight's trade application example, which was an iron condor. An iron condor is an options trade that involves 4 different strikes, 2 on the upside and 2 on the downside, where what you're hoping to accomplish when you implement the trade is that you want the stock to go sideways. That's where your sweet spot is. You do not want it to breach to the upside or to the downside. So if you ever have a chart where you can't quite make heads or tails of what trend it's in, you think it's kind of trendless, then an iron condor may be a good fit for you. Now keep in mind, you do have to have better liquidity for iron condors. There's times when I do options trades here or in some of my other classes where liquidity is not as big of a deal because I might be doing a single leg strategy. In this case, we got a multi-leg strategy involving 4 different contracts, so you do want to have really good liquidity here, which is why I tend to focus on some of these mega cap companies that everybody likes to trade, like a Goldman Sachs. And so in this case, I looked at it as an opportunity to kind of take a trade on a stock that's already reported its earnings. That was a challenge for me as I was looking for trade ideas here today, was looking for those trade ideas that had already reported earnings. And so I sold the 400 strike call in August, and I bought the 405. And on the put side, I sold the 345 and I bought the 340. I collected $1.29 in credit for doing that. And of course, the trade was done while the market was open, and I sent out a Telegram message to all of you who are premium members of Market Scholars, so that way you can get that information sooner than everybody else. So what I hope to have accomplished here is for this stock to stay below the blue line and above the orange line. And if that is the case between now and the middle of August, then I will earn approximately 35% return on risk for this type of a trade. So that's what I had for you here today. I hope you enjoyed the presentation. If you did get value out of this market recap here today, we ask one thing out of you. Just help support the project there on social media, like so many of you do a great job with. If you could click like for me there on Twitter, it would mean a lot. It'll be pinned to the top of my timeline. We also can find the Twitter information within the description area for those of you that watch directly on YouTube. You can also find it within the emails that we send you if you're on our notification list. And you can also find the Twitter widget directly below the video that you're watching on the Market Scholars website. So however you choose to click like, we definitely appreciate that. So David should be back with you tomorrow, and then I'll be back in the chair sometime early next week. Until then, I want to wish you a great weekend. Best of success with your trades and your investments. Watch out for options trading tomorrow morning as we got an expiration date, and I'll see you all next week. Take care, everybody. Bye-bye.